On a day when the markets seemed to dip in early trade and then rose like a rocket from yesterday's support levels. Hello and welcome to Markets Today Talk Back, the show where we will tell you everything that happened in those 6 exciting hours of trading in just 5 headlines. I'm Lata Venkatesh, with me my colleague Prashant Nair. Hi Prashant.
Lata, hi. And what a day, right? I mean, the market looking absolutely lackluster for most of the day and then picking up pace and how towards close. Over the next 30 minutes, we will talk about why that happened, at what point the market took off, and of course, we'll take your questions. To answer your questions on sector stocks, we have IIFL Sanjeev Bhasin and we have Mitesh Thakkar on the technicals, the charts. Gentlemen, thanks very much, both of you, for being with us here on the show. But as always, let's begin by taking stock of what happened in the market, the pulls and pressures that we saw all day long. I think the pressure came in right at the beginning from oil, but then the market did well by close.
Yes, actually, when we started the day, global markets also were a little under the weather. Wall Street as well as Asia looked a little mixed. And we had the double whammy, perhaps, of crude prices going past $71. But as we reached towards the last hour of trade, or the last 2 hours of trade, Europe rose like a rocket. It just recovered so sharply. And crude fell for a few minutes even below that $71 mark. At any rate, it wasn't charging towards 71.5 or anything. It seemed kind of stuck in that 71, 71.20, and therefore the worries were less worrying. And therefore we saw a kind of an all-round rally in the markets. Well, all-round is a strong word. Autos, IT and banks all together charged the index up. It was only oil and gas that wasn't performing, and maybe a few pharma stocks. But certainly what didn't do well were the beleaguered companies. You know, most of them are now penny stocks, those that have huge loans and are on the threshold of NCLT or already there. Those stocks generally did badly, but mainly the mid-cap index itself was in flat terrain. Part of it was also contributed by all these old private sector banks like Dhanalakshmi, South Indian. All of them had charged up along with Lakshmi Vilas Bank in the hope that their banking license will be purchased at a premium by some beleaguered NBFC. Somehow the markets now seems to be thinking that we can't count our chickens before they hatch. So actually we saw that magic waning. But more stock-specific action.
Yeah, absolutely. So top-down first, Lata, as always. PSU banks, a top-performing sector by close. Real estate, Indiabulls real estate powering that sector. Autos across the board gains. Metals and private banks as well. I mean, actually, the Bank Nifty by close was up 1%. I mean, it was a day for large caps because broader markets, small cap index, mid cap index ended up, but I mean, barely so. So it was clearly large caps. So let's start with Nifty gains. Yes Bank was top of the list in terms of gains, 4%. You know, it's moving 10 rupees every day up and down. ICICI Bank was up 2.6%. Or Bajaj Auto was up 2.5%. There was another auto named Hero Motorcorp, and actually Tata Motors as well for that matter, which did well. And in the IT space, we had Wipro and HCL Tech, which were up strongly. Actually, Wipro was the second biggest gainer in the Nifty. Nifty losses coming in Indiabulls housing. From 900 levels recently, it's back at about 830. Asian Paints was down about 3.5 as well. The third top loser was Bharti, but that was like a 0.6% cut. Those are the only two large losers. Broader market picture, I mean, declines outnumbered advances. So let's start with losses in the broader market. Sterlite Tech, Lakshmi Vilas Bank down 5%. Sun TV was down about 2.6%. Coromandel, we had Edelweiss, which lost on volumes, and Indian Hotels was down on some volumes as well. In the broader space, the big gainers, and I mean, lots of names there. DHFL, Ashok Leyland was up 5%. Indiabulls Real Estate was up to 12% almost. We had Canara Bank, Union Bank, Bank of India from the PSU space. Kiri Industries, Cummins India, Panacea Biotech. These are some. We'll pick up on some of these individual names in a bit. ITI, InfoEdge. InfoEdge is now what, 1900 plus. So big one. Actually closed at 1884. So off the highs, but strong gains. And Prestige Estates was up about 3.25% as well. Lata.
Okay, that's a broad picture and the micro picture. Now let's get an idea of where things are headed. First, from our technical expert, Mitesh. What would your next trade be on the Nifty? Is it sandwiched between the levels all of you technical experts were saying in the morning, 11,550, 11,750?
That's right, Lata. I think, while we believe that there's a good chance of an upside breakout eventually happening, but look at the way the market is shaped up. Moved up from 10,750 in first week of March to about 11,750, so nearly 1,000 points. And then I think, we are close to all-time highs. We are quite overbought as well. So I think some time-wise correction, consolidation will require, will provide also the market some strength to get past the all-time highs by a significant margin. So I've been maintaining this view for last many days, and the idea is to buy close to about 11,550. But I think eventually I'm waiting for a breakout on the upside.
Okay, so waiting for a breakout on the upside. Well, we move on to the second headline, the second story of the day. Oil prices continue to rise. Brent hit its strongest level since November of 2018, is now trading above the $71 per barrel mark. The rise in oil prices is on account of OPEC-led supply cuts and US sanctions against Iran and Venezuela. There are also, of course, tensions in Libya, another oil-producing country. Paint stocks took a hit. I mean, they were down, as pointed out. Asian paints with a big cut. Shalimar, Berger were some of the others which lost about between 2 and 3.5% as well. Well, I think we've got to actually let's focus on Asian paints, because there was, of course, the pressure coming in from oil, and there was also a broker weighing in with some thoughts on this particular name. Mangalam is here with all of that. Mangalam, over to you.
That's right, trouble as per CLSA, and their reason for them to downgrade Asian Paints, which is why it is lower in today's trading session, among the top losers on the Nifty. CLSA sees weakness in overall demand sentiment, which is proven further by the data points that we're getting in from either auto sales numbers or discretionary sales inventory, consumer durables, etc. So this does not bode well for paint demand. Add to that, you have oil prices which are increasing, so that may impact the margins going forward. That is CLSA's belief on Asian Paints. And more importantly, they've commissioned 2 new plants, one of which actually caught fire yesterday, but no big impact out there. But 2 new plants being commissioned, up until they ramp up, the cost base of the company increases. So all these to put together, CLSA sees an EPS impact of anywhere between 2 to 5%. So they've pruned their estimates. And above all, the stock is very close to its record high, trading at around 55, 56 times one-year forward earnings. So CLSA believes that for a stock which is trading at that price, there could be some valuation risk. So keeping all these factors in mind, they've downgraded the stock from outperform to sell, with a target price cut of 1565 to around 1400. But while the stock is losing today, just a point that over the last 3 years, the stock has gained more than 60-70%. Over the last 5 years, it's trebled, and over the last 10 years, it's moved 15 times.
Okay, thank you very much for that, Mangalam. So tall valuations of Asian Paints at last getting challenged. And you actually have people giving an underperform on this stock, and it's underperformed in the past week. It's been one of the bigger losers in the month of April itself, just half the month behind us. PK Garg is calling us with a question on this stock. Mr. Garg, thank you for joining us. What's the question?
Thank you, Lata. The question is, I acquired these Asian Paints, I think more than 2 years back, at around, I don't have the exact figures, about 1,300 rupees. Now, I just want to know, I am very old, 80 years.
Oh,
okay. My philosophy is to buy and forget.
Okay.
So it's one of those, that's all.
Okay. So your question is, should you hold or sell?
That's right.
Okay.
For the long term.
Sorry?
For the long term.
For the long term. Okay. Sanjeev, what would you tell Mr. Garg?
Well, stay put. It's a pedigree stock. It has now 63% of the decorative segment. And yes, the short-term aberration may be increased capacity and a rise in crude prices. But this has been a bellwether stock. Any time you bought it, you made money. And I continue to think housing for all, the spread of the consumption effect, the rural effect, the middle income rise, all are going to point towards Asian Paints. So in the short run, it may underperform for a few weeks or a month. But I think in the end, this will create a lot of wealth in the next 2 years. As a disclosure, we've had a buy on Asian Paints. We have a target of 1750. And notwithstanding the spike in crude, we still think they will be able to weather the storm and raise prices. So stay put would be my call.
Okay. Fair enough, Mr. Garg. Stay put is the call. We have to get to the third headline of the day. And that's a bunch of interesting stocks. Lakshmi Vilas Bank, Dhanlaxmi Bank, South Indian Bank, all of them failed to sustain their sheen as market perhaps began to doubt whether the merger with Indiabulls Housing Finance of Lakshmi Vilas Bank will at all result in a license for Indiabulls, and whether that deal is a done deal, whether it will pass muster with the Reserve Bank. Indiabulls Housing actually fell for the second day in a row, and the old private sector banks which had risen also started falling, as you can see, Dhanlakshmi, Lakshmi Vilas, South Indian. However, public sector banks and some of the new private sector banks had a field day today, all of them rising rather sharply.
Rakesh Chandra from Mumbai has written in with a question on Indiabulls Housing Finance. He has 204 shares of the company. His purchase price is 738 rupees a share, so he's still making some money. He wants to know if he should hold or sell. Sanjeev, Indiabulls Housing, what would you recommend Rakesh do?
Well, he's got it at a nice price. He's bought it at the time when the stock was underperforming because of higher bond yields and higher cost of money. I think if they go through with this deal, given that the cost of money will fall, will definitely bode well for them. But there are a lot of ifs and buts at the present time. So the stock may underperform for the time being. But once we get through with this merger, I think it will be a big positive. In the short run, the stock has moved from 700 to 900 and we'll see some consolidation here. But clearly the company is focusing on the slightly longer term, where they want to be in the space where cost of money starts to fall. So I think if he has a longer term view, it will be positive. In the short run, he could book profit at 900.
What if the amalgamation doesn't get the Reserve Bank's nod?
Could you repeat that, Adlata?
What if the amalgamation doesn't get the regulator's nod?
If it does get the regulator's nod, then I think it will be a big positive. Doesn't. Well, then again, it's back to the drawing board. We know that this has been the shifting of the men from the boys, and I think it will tend to languish. But we've heard more color from them where they want to sell some of the real estate and concentrate on the financial services. So all in all, I would say it's a good company to own. Only this would have been a trigger for the near-term re-rating on the upside. If it doesn't happen, it will continue to wait for more developments on how they can reduce the commercial paper and increase the flow on the deposit side.
Okay. Mitesh, you want to quickly weigh in on Indiabulls?
See, Rata, I think the stock was clearly in news. It did very well, and then with the news, some profit booking has taken place. Indiabulls Housing Finance, but I think, to me, I think the stock is in an uptrend. I think buying should be done closer to about 810 to about 805 with the stop below 790 over here, and I think this decline could possibly get arrested with these levels, and I would look at targets close to about 1000 if you give it about 5 to 6 months kind of time frame. Okay. So yes, it might take some time getting past these levels, but I think slowly accumulating on dips should be the strategy.
All right, we'll leave it at that. We'll take our first break, leave you with some market opinion that we got from Sridhar Shivram, the investment director at Enam Holdings. He spoke about what he makes of the market's sudden sugar rush and whether he would be buying in the current rally. Listen in, we are back in a jiffy.
The way Fed has given their broad indication of not incremental anymore cuts, those are normally very good for emerging markets, and we've seen a huge emerging market rally. And the earnings are going to be mixed. So we know already that discretionary has taken a hit. And whereas financials may show slightly better results because of reduced credit costs that they will have. So I think the earnings are broadly priced in. I don't see too many surprises as far as earnings is concerned. What has also happened is that many stocks have corrected. If you take 1 year back prices, barring a bunch of 10 stocks, you take the rest of the market, they've had a significant correction. So your risk reward is slightly better right now. I think the broader market will outperform this year. I think 2017 was an exceptional year. I think even some of the newer people who came into the market thought that they were better than Warren Buffett. And I think 18 was a reality check. So I guess it's good for the industry as such, because many people haven't seen cycles. So when you go through cycles, you know that this is something very normal, and you have to, insulate your portfolio to such events. So I think 2019 is going to be a fairly good year. when we end the year, we'll have more smiling faces than what we had when we ended the year of 2018.